Thank you for joining us at the Harmony Trading System. My name is George, by the way, and I'm gonna show you in great details why the captain setup is a must-have in your trading arsenal. We're gonna dig deep. We're gonna go in how to enter, how to identify it, how to enter, how to exit, how to manage the risk, and how to even once a signal fails, how to take advantage of that formation. So, let's start off with what is the captain setup anyway, right? It is a simple and a rule-based consolidation pattern and a breakout and a breakdown of that consolidation. So we use the Ninja Trader as a platform to execute, and there is a range candle in Ninja Traders called 6NT Rinko. So meaning every 6 ticks that opens and closes, it creates another candle. Now there's any platform that you use, you'll be able to identify and participate in that formation. So no worries there. So what I'm looking for is four candles in a row where price opens and closes, then opens again and closes, but never penetrate the high or the low of that 12 tick range. So it does it once, it does it twice, it does it 3 times. Now on the 4th candle, that's the key. I want to see a close, then a breakdown below or breakdown above it. So now you have a range built up from the value of 4 candles, opening and closing, then the range breakout from that consolidation. Now you see that pattern everywhere. I mean, it doesn't matter what it is. You see it in stocks, you see it in future contract indices, commodities, currencies. It's a human behavior where price is resting for a little bit and it's churning a price action, then it has to expand away from it. So we're intently looking for that type of behavior. What's happening internally in that consolidation as well is the fact that stops are building up above the range and building below that range. So what's happening is where the most stops are building, that's typically where the price is going to go. That's where the high frequency traders are detecting and pushing price lowers, lower or higher depending where the most of the stops are. And we figured out a rule-based system to take advantage of that and participate with the high frequency traders. So again, it's going to be all over the place. Any instrument out there, you will see that pattern and you'll be able to identify it in any platform that you operate from. We have a YouTube channel, by the way, and you could see a lot of examples that we posted when we traded in a live market environment. We posted some of the videos that shows the entry and the exit and the management of a captain setup. So take a moment and look at the Harmony Trader in YouTube, and you'll be able to see some examples. So let's dig in, let's play around with the idea, and let's show you how this all works out. Here we go. So we got, what is that? That's crude oil back in 2016, but we have the formation present here. So what do we have? We have a pullback once the market made a shift in direction. Then you have 1, 2, 3. So what's happening here? You got price opened and closed lower, then reversed in candle number 2, opened and closed higher. Then on the 3rd candle, it opened and closed lower. So you got 1, 2, and 3, and we could not at that moment break below 53.62. So we hit that level 1, 2, 3 times. Now on the 4th candle, look what happened. We come to that level again at 53.62. We hit it and we bounced right back and closed above that formation, or that candle closed above. So at that moment, that by definition is called a captain setup. So you have the range. Now we put an entry via a buy stop limit for two reasons. One of them, we want to get there ahead of the crowd, and we want to pen an order so we'll be ready for the execution right when that fourth candle close. So we don't want to pay slippage. And then, you want to be in there because the price action is typically very explosive at that point. So 1, 2, 3 candles. At the third candle, I am pending my order at the fourth candle at one tick above the close of that candle. And we have a bracket that actually identify when that's going to happen. Then you go 53.73 and you enter. You're risking that 13 ticks. Your stop typically is one tick below the range, the bottom range of the captain setup. So that's the 13 ticks, and you're looking for multiples of that risk on the upside. So this trade worked out very nicely. We're gonna dig a little bit deeper and talk about how you define it. So we said you're waiting and you're watching for 3 candles in a row where price opens and closes, and it makes a nice little range of 12 ticks, and it doesn't break above or doesn't break below. Now the ticket is the fourth candle. When the fourth candle opens and closes, where it closes is the direction that you're gonna go with. If it closes below, you don't have a trade. If it closes above, then you got yourself a captain setup long. Okay, and I'm gonna show you a lot of examples in a second here. So that's the the third candle is critical. Fourth candle will determine if you have a trade or not. So we define our risk by the low, one tick below the range of that formation. It's typically, depending on the instrument, it's 10 ticks, 10 to 13 ticks. And we're looking for multiples of our risk. So if we're risking 12 ticks, we're looking at 12, 24, so on and so forth. Always 1 to 1, 2 to 1, 3 to 1. And we're looking for that breakout. So here we go, more examples. This is where the fun part is. We got what you're seeing here. These bands are actually part of the harmony system. They are a trend following system, so it tells you where the direction of the market is, and that's very critical here for a couple of reasons. Whenever you see a captain setup short and the actual trend is short, I short a lot more contracts. Versus if it's a counter trend where I get a long captain but the trend is short, then I'll give it a lot less contracts because I'm fading against the trend. So that's just something that to keep an eye on, and that's just the risk management portion of this. So identifying the captain setup. All right, let's do that. So you got 1, 2, 3. So you got candle 1 opened and closed higher. Second candle opened and closed lower. Third candle closed higher. So I got 3 candles, and none of these candles were able to break and close above 52.69 or break below what is that, 52.58. So right there we were not able to do that. So now I'm looking for the fourth candle. If that fourth candle closes up, we don't have a trade because we need 4 in a row that are consolidating. So the fourth candle came and closed around 60, right? Or 52.59. So it closed lower basically. So now I have the 4 candle consolidation, and I put my entry at 52.58, which is 1 tick below the close of the fourth candle, and I get executed. Where is my stop? 1 tick above the high of that formation, which is 52.70. I'm risking 12 ticks. Then I'm looking for price action to agree with me, and I'm profiting with 28 ticks lower. So what is that in dollar amount? $280 per contract. So that is a captain setup short in the direction of the market. Okay, we got a winner. So let's go to the next one. We have an aura cloud positive or a cloud positive. So that positive cloud is showing us 1, 2, 3. So we got 3 candles in a row. That first one closed at around 52.71. Price flipped around and closed higher at about 81, then flipped around and closed lower at 72, and basically the price, we got 3 candles where price is not going anywhere. Okay, now I am interested. Two things are going to happen here. Either the price is going to close up on the 4th candle, and if it does, I got a captain set up long, or price action will break down. Then I don't have a captain setup. I'll just price action. Price is moving. I don't have the actual setup that I'm looking for. So captain setup long, you got the 4th candle closed, and it closed higher. The entry is 1 tick above it. 52.81 is the entry. Then you put in your risk at 52.67, 14 tick risk, and we're looking for 23 ticks in that leg of the move. Now the price pulled back and ran back up, and there's ways to take advantage of that. So that's just an example. We got another example. This one is a counter trend move, and a lot of times you see that happen, and some of these are fairly strong. So same idea. Price action pulled back. You got 1 candle closed lower, 2nd candle closed higher, the 3rd candle closed lower. So you got 3 candles in a row where price did not move hardly anything. It just literally is in a tight range. Now what am I doing? I'm sitting here and I'm asking myself one question. Okay, what's gonna happen to the candle number 4? If it closes up, I'm gonna go 1 tick above that close and pend an order, and I'll do that ahead of time, maybe even before that candle closes, by the way. Or if that candle continues lower, then I don't have a captain setup, and I'm just moving on to the next instrument and the next captain setup. Okay, so in this situation, the actual candle closed up, perfect. I have an entry, in my entry 53.06. My stop is always the low of that range, and that low is 52.92, and I'm risking 14 ticks. This is crude oil, and price action went up $330 per contract. All right, a couple more examples here, and you got, what is that, NQ? You have same type of idea. You have a cloud in your direction, price action is moving lower, and you got a captain setup short. You have 1, 2, 3 candles in a row. Price action doesn't pass or break above 49.32. It was not able to do it. There's a lot of selling pressure. Every time price gets to that level, boom, sellers are coming in and putting a lot of pressure on that instrument. Then I'm sitting here after the 3rd candle. I'm asking myself that same exact question. What do I need to do to participate in the potential captain setup? I'm looking for the 4th candle to close. Closes above that range, no trade. I don't have a setup. If it closes within that range, then guess what? I got the 4th candle lower, and I'm gonna go at 49.29, which is 1 tick below the close of the 4th candle, and then I'm participating with 12 points on the downside, risking 3.25, and have a potential of 12 points in that range. This is a counter. This is within the trend, and the second one right here is counter trend. So in the counter trend, same type of formation, and you see a lot of symmetry in that. You see a lot of, whenever they start building up, you see them happen often and often. So this one you got 1, 2, 3. So one opened and closed. Second one opened and closed lower. The third one opens and closes higher. So now what is the price that we cannot break above? It's 49.36. Okay. So if we fail one more time from breaking that price, then what I have is a captain setup short. So exactly what happened. Price hits that level and fails, and got yourself a 4th candle close lower, and that is a captain setup short, and you get in 1 tick below the low of that formation, and you have 12.5 point rotation to the downside. Okay. All right, now DAX. DAX is a beast. If anybody trades DAX, you know what I'm talking about. The same kind of formation. You have a huge trend building. You have the cloud in your favor, and then price pulls back. You have 1, 2, 3. Price cannot break 492.5. Okay, so struggling to break that level. There's a lot of demand. Every time we hit that price, demand comes back up and picks up the shares or picks up the contracts. So now the same question. We're looking for the fourth candle close. You close lower, I don't have a trade. You close higher, then guess what? I have a captain set up long with an entry of 99.5, and that is about $1,000 in money per contract on 39 points in DAX of that signal being generated. Okay, and 7 point is my risk. All right, now it's important to know when a signal is working. We also, as equally important, is to know what to do when a signal fails and stops you out, because you need to know how to handle it, and there's a great deal of opportunity to take advantage of once a signal fails. I'm going to show you how. So we're going to take the same logic. You have a consolidation of one candle, one down, the second one is up, the third one is down, and the fourth one is up. So in this logic, you are going long. You're going long at a entry of 470. You're risking 7 points with a stop of 463, and you're looking for 18 points or higher. You're looking for a breakout above 490, and this is DAX in this one. That doesn't happen. We actually, what the price did is hit that price one more time and failed, and gave you a fifth candle in that consolidative range. So this formation is failing. This captain setup is failing. So if I was long at 470, what am I doing? I am basically taking my stop, and I'm taking 7 point stop, which is about $150 basically per contract. So I'm taking that stop. Then I'm asking myself, hey, listen, do I have an opportunity to take advantage and profit from the failure of this consolidation? In this case, yes, there is. And here you go, an entry of 463. So where you got stopped out, you could re-enter and reverse on the short side. And the cloud is in your favor. So the trend is in your favor to actually take that short, and that becomes a 57 point over $1,500 worth of money on the downside. So it's important to know when you have a signal that works, to recognize it, and when a signal fails, you have the potential and the opportunity to actually take advantage of that failure. Okay, so we'll take couple more examples here. This is along with the trend, and you got yourself 1, 2, 3 candles, and I'm looking at the far left of the screen here. So 3 candles populated. You have a range of a high and a low of that formation, and guess what? Prices are not breaking above or below, but the fourth candle closes up, so that gives you a captain setup long, and you enter one tick above that fourth candle close, and boom, 20.5 point profit potential in this rotation. Okay, now again, let's look at an example that doesn't happen often, and actually I traded in the live room these contracts, so I wanted to kind of bring that example to the front here. So you have 1, 2, 3, 4, 5, 6. So actually the price action ended up doing not only 4 but 6 candles and broke up, then failed. So that is one that you're gonna get stopped out on. So you get in there at the fourth candle long, because this is a captain setup long, then the price comes back down and fail. So in that situation, you say to yourself, okay, well, it consolidated long enough, and now we have a failure pattern. We take that failure pattern for lower prices. And in this case, that I ended up making about 6.75 points, or from 875 to 525. So about 3+ points. And I had a couple of contracts at 50, 10 on that one. So the idea here again is you gotta know how the signal work, and you want to know also once it fails, you take your small stop, and then you could reverse and go on the other side and take advantage of the price action. Okay, so here a little bit of more details on how to manage that failure. So if that failure formation happens closer to the inception of a new trend, I reverse those signals and I add a lot more contracts to them. And I'm also looking for other signals we use, like switch trades and trigger trades and spear trades. You see a lot of that in our live room, where once it fails, you reverse and you start adding to it at a very specific formations and behavior. So that's also important, because the ones that work, you want to be big time adding to them, and the ones that don't, you want to pair yourself away and just take small stops. Okay, I'm always looking to trade within the premium hours, and the premium hours for the futures market is basically around 8 o'clock, from 8 o'clock Central Time to around 11. Typically, most of our trading is done by 10 o'clock, and we're done for the day. About a couple of hours, that's pretty much all you need in the markets. How to optimize them? How to optimize the actual captain setup is fairly simple. When you have a signal in the direction of the trend, instead of putting one contract, I'm putting 2 to 4 or more. If the signal or the captain setup is happening counter trend, you'll see me do 1 or 2, because I'm going against the flow of the river of money. Okay, some of these signals still work, but I don't want to be over leveraged in them. That's how I manage or try to optimize the results. Always I'm looking for bigger targets, and there's a Harmony swing trade indicator we use that shows you targets 4 and 5 are about 6 to 8 times the average of volatility in that instrument. So that helps us capture a big move in the market. All right, so let's take a quick look here and dig into the market of Friday the 11th, August the 11th, and see a couple of signals that happened in the market. Also, you could sign up for a free trial with at our website, harmonytradingsystem.com, and we also have a special offer for you on room access as well. So here we go. Let's take crude oil and take a few of the signals that happened. Let's take a couple of them here. All right, so here we go. We got a captain set up here. And when was that? That was on the 10th. So let's take the 10th. Here we go. We'll go from the 10th onward. On the 10th, so you have candle 1, 2, and 3. So you're waiting on the fourth one to close, and it closes. So the entry is at 49.22. Your stop is one tick below 49.09, so it's 0.8, and you're looking for multiples of that risk. Price jumped up about 7 ticks, pulled back, never stopped you. Then the price made a magnificent move on the upside. Okay, the one before that, you have 1, 2, 3, 4. So you're getting short here at 49.11. You're getting stopped out for about 10 ticks. Then you're reversing at 49.24 for a nice little pop-up of about to 49.44. So that's an example of getting stopped out and flipping around. This is an example of getting in and participating in a big move. Then you will see this quite often, where price action will come in and fail. Here you go, captain setup 1, 2, 3, 4, and you're getting your entry at 49.79, and big time move and multiple adding opportunities. And this thing actually ended up going from 49.77 all the way down to good lord, here, look at that, 48.19. So you see some serious moves happen after a captain setup, and that's what makes it very lucrative, because you get the opportunity to scalp the market for a profit, then participate in a big swing move afterwards. Let's take a look at an NQ, And again, this happens in just about every instrument. You got 1, 2, 3, 4. The fourth candle closes lower, 927.75, and price action, collapse significantly, about 24 points in that one. Let's see if there's any more here. You get the idea. That's basically the captain setup. It's a great tool to use. It's a consolidation, breakout, breakdown from a consolidation with and against the trend. And it happens in about every instrument. I hope this was very helpful to you. If you have any questions, you could send me an email at support@harmonytrading.com. You could join in our 1-week free trial by filling a form on harmonytrading.com, and we also have a special offer for you on participating in our trading room. Have a wonderful day, happy hunting, and always trade in harmony.